So in this video, I'm talking to you about the current German property market. I'm explicitly talking to you as an international buy-to-let investor or someone who actually owns property here in Germany. What's happening to the market? High energy prices, high inflation, interest rate is going up, economy is struggling, a lot of things are happening. So watch this video and I'll talk to you. I'll go through the 7 major points you need to be aware of. So first of all, just to say hello to everyone, thanks for seeing that video wherever you are in the world. And either you already do own a property here in Germany or you're just considering to purchase one, you need to check 7 points before you go ahead, of course, if you want to purchase or sell or rent or whatever you want to do. So first of all, let's quickly discuss the major market drivers. I think that the biggest one was, of course, a war we had in February this year. Sadly, we had that war in the middle of Europe, which is a complete nightmare, I think, for everyone, especially, of course, for the Ukrainian people. So we have been affected directly by that in the German economy. As you know, the German economy had very, very strong relations to Russia, especially when it comes to the energy situation. So that has changed. The Germans are now getting out of that situation by making contracts with other countries, trying to do other things, more efficiency, etc. So that's happening already. However, the economy is under pressure, especially the economy who's producing cars and manufacturing goods, you know, all the pharmaceuticals are under pressure, the chemistry is under pressure. All of that is going on at the moment. As we speak, there's a lot of new rules that will come into place next year when it comes to the energy situation. So energy-wise, we are having a very, very, very high standard on the renovation, the refurbishment, but also, of course, on the new builds. So when you are a property owner in Germany or looking to buy one, there are basically 2 major markets. One is the old build, as we say old build, and the other one is the new build. You can actually buy both, and both make sense, but you need to be aware of the pros and cons. So maybe let's quickly jump into the new builds because that's the easier part. The regulation standard in Germany, if it comes to get a planning permit and to build a new build, is very, very high and very, very strict. So the cost of construction in Germany is per square meter, as we say here, is around 3,000 to 3,500 euros per square meter. That is the pure cost of construction. That doesn't include the land, it doesn't include any other things that come along with this, the time you need to get the planning permit, though that's all not included. So 3,500 to 3,500 is the average price you would pay for an average new build, which, if you compare it to other countries, is crazy high. The second thing you need to consider if you buy a new build is that the plot of land, of course, can vary between, for instance, the city of Leipzig and Berlin. The plots of lands are it's a big difference in terms of the price, but the quality build is exactly the same. So that's all over Germany, it's the same. But the price of land is different. Of course, if you buy in the city center of Berlin, you know, it's much more expensive than in the city center of Leipzig, for instance. However, the economy of Leipzig is pretty strong, same in Berlin these days. However, if you now compare the 2 different markets and maybe other markets in Germany, you always should watch out for you know, a lot of students, a lot of things happening in town, you know, good economy, big companies, blue chip companies, which you have in the both cities, by the way. So that's all positive. However, cost of construction is the same, the price of land is a bit different. So in Berlin, there won't be any new build you can buy in Berlin below 6,000 euros. So 3,500 is a cost to actually produce the apartment. Then another 1,000 euros is a plot of land in average. So you're talking about 4,500. Then you have cost of finance, you have the developer margin. Developer margin in Germany is around 10 to 15%, depends a little bit on how big the developer is. So if you add that all in total, there's nothing in any major city in Germany below 5,000. Berlin is around 6,000 euros. A minimum price, I think more realistically, in good areas, it's around 7,000 for a new build, going up to 10, 11,000 if it's in prime location. And in Leipzig, we're talking about 5,000 up to 6,000 for a new build. So as you can see, the difference between Leipzig and Berlin is there, but it's not as huge. So the second point, if you look on the new builds, is the potential market rents. So on the market rents, you need to be aware of that, of course, in Leipzig, the rents are lower than in Berlin. In Berlin, at the moment, we have a very, very strong rental market, which is, again, a good sign. The interest rate went up, so the rental market is pretty strong because people who could afford to buy in the year 2022 cannot afford to buy anymore, so they have to keep on renting. But they're usually quite wealthy. They have the funds available to pay a higher rent than other clients. So coming back on the rental yield, in Leipzig we're talking around 13 euros, 15 euros per square meter in a very good area. In Berlin we're talking more like 18, 22, 23, 24 euros. Of course it depends on the size and a lot of other things in good locations. This is the average rent you could expect. Then talking about the yield, in Berlin you might get 2.5% to 3% yield, realistic net yield after all costs have been taken off. In Leipzig you would look at more around 3.5% to 4%. That's possible in terms of the yield gain. Now there are 7 big topics you need to be aware of that happened this year that you as an owner or buyer should be aware of. So the first thing is the rising interest rate. We had 1% 2022 for local taxpayers, and now we're having 4%. It goes up a little bit, but that's, or down a little bit, but that's a sort of ballpark figure. In Germany, we have repayment of capital. That means you have to come up with another 2%. So the actual rate is 6% nowadays, and it used to be 3%. So for people, it has doubled. The monthly expenses on repayment for the mortgage, etc., has doubled within less than 12 months. Jumping from 1% to 4% interest is huge, and it's something that has never been seen before in such a short period of time, and that has more or less shocked a lot of locals. But that doesn't mean that the supply demand hasn't changed. It just means that people have to manage it, and they have to get around it, which we already can see in the market. We can see that people are now accepting interest rates between 3% to 4%. Luckily, we hadn't had the 5% by Christmas this year, but next year we are anticipating 4% to 5% interest on average, which, to be fair, is a fair interest rate as long as the yield works out for investors, of course. So that's the biggest thing that has happened this year, but we see a stabilization next year. The second part, of course, is the rising rents. They have risen this year quite significantly. We also expect that next year the rents will continue to rise because the supply-demand issue is still out there. And depending which city you are, governments aren't being so great in getting new builds on the road, especially affordable new builds. So that's something that will continue. Then we have the big difference, which I touched earlier on, is the difference between new and old build. That the gap is widening, but not the gap actually between the fully refurbished old builds. Why? Because of the cost of energy. If a fully refurbished old building has a high energy certificate and is low consuming, then of course that is quite comparable to the new build. And that's actually where you can make quite a good investment. If you get a good developer who does a great refurbishment for you, then a fully refurbished Altbau could be equal in the rental market compared to the new build. So that's something you should watch out for. So fully refurbished Altbau units, as long they are fulfilling the same criteria than the new build, they're definitely a good thing to consider, especially these days where the cost of construction is so high, then that's a good opportunity for you. Yeah. So that's something you should watch out for. Then, of course, the so-called site cost, the bills. For a lot of our international investors, we've been working with packages. So people were signing a rental contract for 6 months, 12 months, 24 months, whatever. And then we had fixed rental incomes, and we just deducted the consumption, the energy consumption from that. That might be something we need to watch out for, especially nowadays when we have older apartments which have high energy consumptions. That's something that we should check. So please, if you do a rental contract with your tenant, make sure that there are these costs being taken care of. So there should be a surplus for you as a landlord if the costs are going up. So that's a little clause in the rental contract you should be aware of. The other thing is why the new builds are renting more than or for a higher price than old builds is, of course, that the old builds have higher energy costs. And so even though the net rent is less, the total rent for the tenant might be higher than even in a more expensive new build because the site costs are so high. Average, we had around 250 in the better years, but 350 in average on site cost per square meter, of course, for the new builds. And for the Altbaus, or for the old apartments, we always had a little bit higher costs, but they were starting at 350 to 450. And that's something I've seen Altbau units that haven't been refurbished. They're talking about 5-6 euros site costs, and net rental income for the landlord is only 6 euros, maybe 7 euros. So you can see that the net, is low, but the site costs go up in the Altbau. So that's something you definitely should watch out for. Yeah. Then we have a couple of other things, of course. We have the situation on the distressed market. A lot of people have contacted us and said, hey guys, the interest rate went up from 1% to 4%. There must be a lot of people now selling quickly. No, that means that you don't really understand the German market. In Germany, the interest rate is fixed for minimum 5 years, but more typically for 10 or even 15 years fixed interest rates. So as long as the landlord is paying, or the owner is paying the mortgage, everything is fine. And they are all fixed interest rates. The big question will be, what happens in maybe, let's say, 5 years, 4 years, 6 years, when the period when people started to borrow for 1% or maybe 1.5%, has reached the first 10-year period. I think that's an interesting question. So if you go back on the statistics, you will see that the low interest rate has hit the market in the year 2017, 18, 19, 20, 21. So this is where we had 2.5% interest. That is changing now. We don't see interest coming back to 1% anymore, at least not for the German taxpayers. So I think that's something to watch out for the year 2026, 2027. So that's something, if people are not able to basically pay back the mortgage until then, or at least a significant amount, then that's something we should watch out for. However, that doesn't mean you should wait until the year 2027 or 2028. Why? Because we have this crazy inflation. Yeah, you guys know what it means, inflation. You go to the bank, borrow 10 euros, 4% interest. The year after, you give them back 10 euros and 40 cents. But the 10 euros and 40 cents are only worth 9 euro and 40 cents because we have 10% inflation. That's something, it's that simple, that is. So if you are into real estate, you're pretty much protected against inflation as long as you're buying the property for a market rate. That's that easy as it is. So even let's say the market would maybe drop by 10, 20% within the next 3 to 5 years, which is not very realistic, then even then you make money when you buy today because inflation is on your side. So just for you as an investor or for someone who actually owns property, do not panic. Germany as economy is very, very stable. If you talk about a recession, at the moment it looks like we're having a very mild recession out there. So general terms, economy-wise, I think just give me better countries to invest in these days, especially when you earn in US dollars. At the moment, the exchange rate is on your side, etc. So it's a very safe investment. Yes, the yield isn't great, but you have that 10-year time period when you basically pay off the mortgage, or at least part of it. You can sell the property after 10 years, which is tax-free, at least in Germany, if you're not a commercial investor. So if you just sell a couple of apartments or units after 10 years, it's tax-free within Germany. So what's the major topic for you? The 7 points, just to summarize them. First of all, yes, we have a recession, or we are entering into recession, but it looks like it's going to be pretty mild, at least compared to other areas in the world. Second, high inflation is out there. I don't think it's going to be away within the next couple of months. So if you buy property within the Eurozone, high inflation will be there, historically high inflation, which you can profit. Third of all, interests are, I think, pretty low with 4%. And they're fixed. So for 10 years, they're fixed. So basically you buy property and 10 years you just keep on renting, and you have a 6% difference at the moment between 10% interest, 10% inflation, 4% interest. So you actually make 6% on a yearly basis if you play the inflation game. Fourth point, energy prices. Watch out for what kind of apartment you're buying. It should be either a new build or a fully renovated or refurbished outdoor apartment. I think I just explained to you why. Fifth, make sure if you rent out your apartment, you have clear and very simple rental contracts that actually explains to the tenant that he actually has to pay additional costs if energy prices going up. However, having said that, the German government stepped in, already regulated energy prices in Germany, so I don't think the worst is already behind us. Six, I think next year interest will be anything between 3 to 5%. So people will adapt to the market. I think the market will stable and will shift like that. Maybe goes up a little bit in 2 or 3 years, when people realizing that renting is so expensive that buying is still cheaper. And I think in all big cities worldwide, you can see that buying historically always was cheaper than renting. Then, of course, the biggest point, which is the last point, is simply the supply-demand one. So there is not enough on the market, either on the rental side or on the sales side, that actually people can afford. So if you are investing into the market, make sure that you actually buy a property that people can rent, that the realistic rent is there. And second of all, that you buy property where there's a huge demand. Huge demand, every city is a bit different, But in general terms, you can say this is something that people can afford and solves a problem. So if you go into a student city like in Leipzig or university city, of course Berlin, then the typical student apartments are very, very sought after, but also the family homes, because families are looking to get a second bedroom, you know, people having children, etc. So that's also something which you should watch out for. And so supply demand is pretty much on your side. So out of these 7 points, I think as an investor or owner, we're pretty safe here in Germany. And yeah, last but not least, please check your exchange rates with the euro. Depending on what kind of income you're having, you know, what's your inflation in your home country, etc., then it definitely makes sense to go into the Eurozone. If you have further questions, please feel free to contact me. You can contact us under blacklabelproperties.com. You find my direct calendar on there, which you can book an appointment, which is 30 minutes, free consultation, and I'll guide you towards maybe, you know, the right properties, but also if you want to sell or rent or whatever, just give you a couple of tips and tricks and what you should watch out for. Thank you for watching.